Crypto Kids, the price of Bitcoin is due for a short-term crash, and this is because of a ongoing CME gap open at $88,200. You guys know the drill at this point. There's an approximation of 97% that all Bitcoin CME gaps that are opened need to be closed. Bitcoin currently on the spot price is trading at $97,100. Just to jog your memory, in the prior videos, we stated that if Bitcoin can break above the 94.2 level with at least 2 daily consecutive confirmations, that I'm going to be expecting prices to be reaching 106. In this video, I want to give you an update on that thesis and show you what I'm doing from a trading perspective. Also, we got the producer prices I want to quickly commentate on, and silver has hit a whopping $92 that we predicted actually it would do over on a video we uploaded with Carl approximately a month ago. So stay tuned until the end. You're going to find this very valuable, right? Make sure to destroy the like button and subscribe for daily content. We're here every single day giving you the latest and greatest in crypto and Bitcoin. So if you've done that, I trust you've done it. Let's jump into the Bitcoin price action. So ascending triangles, theoretically, right, they do tend to be on the more bearish side if you're coming from prior bearish price action. But from my experience with these ascending triangles, they do tend to mark a bottom, but I gave you about a 50% chance with this one. So we stated there's 2 price levels to be looking out for. One of them is 94.2. If we break it, then the magnetization will be going to the 106 region with price. If we break below 84.2, then you should be expecting prices to collect liquidity below the April 2025 lows. As it looks like right now, price has chosen to break to the upside, and I still believe that the Bitcoin price will at some point reach the 200 daily moving average. But mind you, I am not opening any specific extra position on top of the current long positions that we have that are doing very well over on weeks. And if you're looking for a place to be longing, shorting, and trading crypto, you can go to the first link in the description down below to sign up to weeks and begin trading. I'm not opening any additional long positions to the one that I have right now on weeks. I'm not opening any extra ones to be trading this. Here is why. Well, firstly, we have the Bitcoin CME gap. This CME gap will close, from my perspective, eventually. Whether if it's now, whether if it's after hitting 106, then closing it, it's, in my opinion, going to close it at some point, all right? It's likelier to do it sooner rather than later. So because that's open, I don't want to enter into any new position for Bitcoin. And I want to showcase something interesting. So we know how from a structural perspective, this cycle is quite similar to the cycle that was created between 2020 and 2021. Guess what? After a Q4 top, just like the one we had this time around, Q4 top, right over here, following a lower high and then a higher high with that RSI bearish divergence, right? Similarities everywhere. After that drop, Bitcoin also, between January of the year after, all the way into March, created an ascending triangle consolidation pattern. It experienced the breakout, retested the 200 daily moving average, and then saw a drop to the downside. When we take a look at that price fractal and put it onto where we are today, I think it would make sense to assume that a similar situation is going to take place. We've already identified in prior videos that every single Bitcoin cycle, we come up to that 200 daily moving average following a break below it. So I still have that expectation. It can be a little bit different. Obviously, it's not going to be repetitive exactly 100%, but it could very well be the case that we get up to it and then we see the correction, or we see the correction first, close the CME gap, then get up to it, and then see the dumpage in price to follow along, in my opinion, a consolidation for a couple of months. So in terms of trading, I don't want to open any high leverage positions right now. I'm still planning on shorting between not 99.5, but 101.2 into that 200 daily moving average. I'm going to be taking profits on some positions that I've opened before, and that is the trade setup that I'm currently looking at. But please be careful. That CME gap is, in my opinion, going to close. Today, we got the producer prices data. There's 3 big inflation data to always be watching. One of them is the CPI, one of them is the producer prices, and then you also have the PCE data. The producer prices is a unique one because you look into the costs, the expenses that the producer faces. If the producer of goods is facing increased costs in their production, then eventually that's going to be transferred onto the consumer. if a company or if a producer has more cost, they're going to increase their prices. Higher prices means inflation. Inflation means the cost of living is becoming worse and worse and worse. So producer prices were expected to come in at 2.7%, but they hit 3%, reversing their downtrend into now an uptrend. There's still clear warning signs for inflation. We know that when producer prices go up, it tends to reflect negatively on the CPI. It causes the CPI to go up too. Yes, we look at trueflation, we're at that 1.7% range, but when you go to the official CPI numbers, you're at 2.7%. The Fed doesn't care about trueflation, it cares about the CPI. So we're still off from that 2% target because there's still warnings for inflation, and I think there's still risks to unemployment. It's getting better in the short term, but it's not at the level where we should be cutting rates. The Fed has a 95% chance of keeping rates stagnant, and I think that's what they're going to do. President Trump wants to cut rates, but it just doesn't make sense at all from the viewpoint of the dual mandates. Cutting rates now would lead into a massive recession over the next or after the next 1.5 years. That's my view. And finally, before we end off this video, guys, silver is rocketing. We stated that silver has a massive, and we've spoken about this multiple times over the past few months, but silver created a very large 15-year cup and handle pattern. We mentioned that a breakout from this cup and handle resistance will likely take us into the over $100. We made this video with Carl. We said that we found the next big thing, and it was referring to silver, and it's up almost 100% since we made that video. So congrats to anybody that purchased silver. I think a top will be formed quite soon, hopefully over the $100 region, but I started to take profits on silver already because whenever we do identify the top, I think the crash will be fast, just like the crash that we got in 2011 to 2013, just like the crash that we got back in the 70s and 80s, right? So whenever we do identify the top, I think prices will drop. So I'm slowly taking profits. I think a run like this is not going to be noticed on silver for a very long time in the future, but it was nice to make money on precious metals when crypto was in its consolidation. So guys, thank you so much for watching. Take care, and I'll see you all on the next video very soon. Bye-bye, guys.